Let's get Shailendra Chouksey now, Wholetime Director at Lakshmi Cement, now joining in. Mr. Chouksey, hi, morning. Thanks for joining in. The point I want to ask you is that this time around we have seen a bit of an early offset of monsoon. Has that impacted the kind of optic that you've seen and the kind of sales numbers that you've seen for this particular month?
Yeah, June certainly has seen a drop in the lifting, and I think it's not simply the monsoon. Monsoon, of course, has been a catalyst for bringing down the demand, but I think is the overall general slowing down in the construction that we have been witnessing for last 1 year, and it continued in April, May. April there was a slight bit of lifting. We recorded, the industry saw a growth of about 8%, but May it dropped down to about 3% on all India. But if you were to segregate, the region-wise, the areas where we operate, like north, west, certain part of central, there we have seen a demand going down to practically a flat growth, and June we have seen a negative growth. So I think it's a continuation of the slowing down, and monsoon has been the trigger as far as June is concerned.
Okay, therefore if you have to estimate the year's growth, FY14, what would it be, Mr. Chouksey? You will probably get some relief from rain-driven rural demand, but as a whole, how would you estimate volume demand, for instance?
You see, much would depend on the monsoons, I believe, and we expect the monsoons are going to be normal and good, in fact, very widely distributed if the current trends are an indication. If that be the case, then I think the rural demand would pick up, some of the service sector should also pick up, and therefore one could expect certain growth, not that sort of a buoyancy that we saw pre-10-11, but maybe we could somewhere around reach 5.5 to 6% growth.
Okay.
That is, to my mind, one of the most optimistic. But otherwise, if that, God forbid, if that doesn't happen, then the infrastructure being where it is, the overall reality sector being where it is, then of course one could see fairly on the negative terrain.
Oh. Mr. Chouksey, what about pricing? How much more decline can we see in pricing? Because this year we have seen up to 5 to 10% decline in prices. Is there more room on the downside, or you think that's capped now?
I don't think we really have a room to go down further, as we have not been able to even pass on the steep increase in the railway freight and the other freight that we have witnessed. I'm sure, you recall that there was a very steep hike in the diesel price for the bulk consumers, over 25-27%, resulting in the railways hiking their freight by over 22-24%. So that is a very serious impact, as close to 50% of the total cement output and close to again 40 to 50% of the imports are being dependent on the rail. So I think with this heavy dependence on the rail, this surge in the railway freight increase has definitely impacted the costing of both the input and the freight and the output. So I think it has already put a lot of pressure on the pricing. So I don't think we have really a room to go down.
I agree with you, Mr. Chouksey. In fact, that's what I was coming to as a follow-through question. Therefore, how much more hit may happen on your margins? We have to price in continued increases in many administrative costs, all the way up to the rise of gas prices in April 2014. A series of electricity prices hikes can also not be ruled out, as diesel prices continuously go up. And more importantly, yesterday we got that disturbing revelation that wagons, the railway wagon output for orders for last year itself have not been tendered. This year's orders have not been tendered. Do you see a problem in terms of availability of coal and the ability to reach your cement, these putting some kind of margin pressures?
Yes, certainly. You see, if we are switching over to more costly options of transportation, the cost would increase further. So, but I do not really see that sort of a legroom available for the industry to, resort to. So, I will therefore not be surprised that if the volumes in fact suffer, not so much as the margins, the volumes might suffer, we just simply don't have much of a legroom to switch on to the alternate costly mode of transportation. So I think we are in quite a catch-22 situation right now, and only a pickup in the demand, and I think we are all looking at the sky that this sort of a rains continue all through and all over uniformly. I think that would be a good savior.
So, Mr. Chouksey, give us an outlook for FY14 in terms of your capex plans, in terms of what you expect as far as top line is concerned.
You see, we are right now in the midst of substantial expansion programs. Our capacity last year was about 4.7, which now stands to about 5.6 million ton, and we have taken one greenfield site project at Durg, and we are also rehabilitating a closed unit in Rajasthan, Udaipur Cement Works. So right now, we have taken up about something like over 2,500 crores of expansion projects, of which we have already invested about over 1,600, close to 1,600 crores. And I think in this financial year we'll be spending something like 650 crores, and the year thereafter, that is 14-15, it will be again another 600 crores. So I think by the FY15 we would have completed expansion projects worth 2,700 crores, which will take our capacity to close to 10.5 billion tons.
Okay. Well, just one final quick question. Your interest expenses were down to 18 crore from 21 crore in the last reported quarter. That's a pleasant sign. Would that trend continue?
That may not continue. We had actually, there was some interest income also out of the cash accruals that we had. We had over 500 crores, liquidity position, and that was deployed in some of the mutual fund, etc. But now more and more those that cash accruals are being now deployed for our expansion and as per the capex plans. So that may not remain a feature for next, at least not for next 2 years.
Fair enough. We'll leave it at that, Mr. Shailendra Chouksey. Thank you very much for your very perceptive analysis of how you see the situation coming up. It could be somewhat relieved by the monsoon, according to Mr. Chouksey, but I think fairly bleak as far as input costs are concerned, and infrastructural constraints of sheer availability of raw material and reaching your surplus. It's pathetic when you're planning expansions and you have to come to terms with the fact that because of infrastructural constraints, you will not have as much capacity utilization as you would like.
Indeed. Well, I'm